Greetings and welcome to this week's edition of 401k Real Talk. This is Fred Barstein, contributing editor at wealthmanagement.com's RPA Edge and CEO at TROW, TPSU, and 401k TV. I review all of last week's stories and select the 5 most important and interesting ones, providing open, honest, and candid discussion you will not get anywhere else. So let's get real. First story, after getting funding from Bain Capital at a $1 billion valuation, Carson Group made its 5th acquisition in less than a year, buying Northwest Management with $5 billion of AUM, of which only $1 billion is wealth, and much is in DC plans. It is their largest acquisition by far and brings them deeper into the DC world and at the crux of the convergence of wealth and retirement. Previously, Carson had partnered with Endeavor to provide clients with training, education, and wellness, as well as Vestwell for small plan record keeping, showing a strong commitment to the DC market. Question is, will other RIA aggregators like Carson follow? In late 2021, Creative Planning bought Lockton's retirement division, which had $120 billion at the time. While larger RPAs have a significant advantage over most RIAs when competing for DC plans, they are well behind on wealth management, with a few exceptions. Next story, despite high-profile disasters, cryptocurrency is not going away, with Fidelity confirming that they will be integrating crypto trading and reporting in their advisor workstation. Fidelity made big news last year announcing they would allow crypto in their DC plans, which was basically squashed by a stern DOL warning. They have been big proponents of blockchain, which has the potential to revolutionize DC record-keeping technology while providing safe access to participant data. Fidelity is just the first of what is expected to be other work advisor custodians to bring crypto into its native platform, while BlackRock and others have recently applied for a spot Bitcoin ETF. Next story, at Great West Investor Day, Empower CEO Ed Murphy, claiming that subscale providers are at risk, predicted accelerated provider consolidation while touting Empower's scale and capabilities. After acquiring robo-advisor Personal Capital and integrating it into their workplace platform, which has 18 million participants, Empower went on a bender, buying MassMutual and Pru's record-keeping divisions. Many experts believe that only a handful of DC record keepers are at scale based on participant count, with others like the 2 payrolls, American Funds, and Schwab uniquely positioned, as well as Ascensus, the king of the independents. Murphy claimed that limited organic growth has turned the 401k market into a takeaway game, though the potential for new plan growth by small businesses could change that. Regardless, fees are declining while costs are rising, which should result in more consolidation in the next few years, with big providers like Empower, Fidelity, and Vanguard doubling down on consumer marketing and building their brand with participants, further raising the bar for others. Next story, while Ascensus's future plan has taken a long acquisition breather, another firm is stepping in. Buoyed by investments from Vistria, U.S. Retirement and Benefit Partners, which started with a focus on 403B providers is buying up compliance-only TPAs, most recently Paragon in the Philadelphia area, with more expected to be announced. While there are thousands of compliance-only TPAs, with just a few like Future Plan and US RBP at scale, the number of record-keeping TPAs, which had been almost 400 a few years ago, is dwindling, with the census the largest doubling down with the acquisition of Newport last year. The entire DC industry is consolidating, led by record keepers, RPAs, and TPAs, while related industries like broker-dealers, asset managers, and RIAs are going through similar transitions. Finally, esteemed UCLA professor Hal Hershfield recently published Your Future Self: How to Make Tomorrow Better Today, a culmination of his life's work. Hershfield's research indicates that the reason that some people have trouble sacrificing today for the future, like saving for retirement, is that our brains see the future selves as other people. While the DC industry continues to make incremental progress, the biggest impact over the past 15 years, has been integrating behavioral finance like the auto plan, heralded by another UCLA professor, Shlomo Bernartzi. This new research by Hershfield has the potential to unlock the key to engagement, which is critical to the next phase as wealth management and lifetime income converge at the workplace. So those were the most important and interesting stories from the past week. I listed a few others I thought were worth reading. Please let me know if I missed anything or if you have any comments. Otherwise, I look forward to speaking with you next week on 401k Real Talk.